So why are we fearful of getting into the business of trading, especially futures, right? Or any particular market? It's because we have money tied to this. It's like going out and getting a job and becoming employed through an employer. All right, that's easy, right? As long as you can get the interview, pass the interview, they select you, and then you land the job, right? And you get a constant check. Right? You're really not having to really worry about much. As long as you show up for the job and do the job correctly, you're going to get paid. When it comes to futures now, there's more risk involved because for one, you getting paid is based on your skill level, the craft, and you being able to read and understand what's going on the charts, because you are up against yourself in trading and up against a bigger brick wall, which is the banks and institutions. All right. It is their goal to see you fail. They don't want you to succeed. They want to take what you have and keep it moving. So the goal ultimately as a great trader, someone that has the skill set, is to understand what is the banks and the institutions, what are they doing? Okay. And they leave a footprint behind on the charts for us to be able to read as retail traders. And that's why I trade supply and demand. And I'm going to cover that in the strategy because this is what has transformed and eliminated most of the fear for me from the moment I started trading. And the fear will never go away, but it will lessen. There'll be less of it in time as you can prove to yourself that you're consistent and that you can make money daily. Because that's the key. As a day trader, we're looking to do what? Draw profits out of the market every single day. We want to become profitable, but profitability becomes from being consistent. All right. Not just taking or chasing the market, thinking that you know how to trade, and then you get into, and everyone, there's a lot of people out here that think that they have the money. You may have the money. Okay. But these markets are going to take everything from you. I promise you, if you just throw a bunch of money into a brokerage account tomorrow, thinking that, oh, this is easy stuff. Look at the market's doing. It's just making higher highs and higher lows. It's pushing up. I'm going to chase. I'm basically going to take a pullback and move with the market. But the market could actually be in a position to get ready to reverse. Are you able to see that? Are you going to know how to trade it accordingly if it does? Or are you just going to chase the market with hopes and dreams that it continues going in a direction? And that's what makes the difference of smart traders and those that aren't smart traders. But the fear is attached to the money portion of it. No one wants to lose money. That's why I always tell people, put away and save X amount of capital so that you can put it into a brokerage account. Or maybe you trade with some particular prop firm, whatever it is, and you're taking withdrawals, and you want to put into a personal account. That should be your goal. All right. I don't trade, never have with prop firms. No particular reason other than they just didn't exist when I started trading. And if they did, I'm sure there wasn't a bunch of them out there, but I didn't know much about them at all. And I have no interest in trading with them simply for the fact is I've been trading with my own funds since day one and have built my capital that way and built my account. So what I want to do is share with you a strategy that works time and time again. I'm not saying it works every single time because we don't control the market as retail traders, but we have successful traders that are part of our Discord community and that are profiting, that are making money. Some trade with their own capital. Some use prop firms to take withdrawals and have started their own personal accounts. Okay. But at the end of the day, it's just a matter of being able to prove to yourself the consistency portion of this business or game to make sure that you can become a full-time or part-time day trader and pull profits out of the market. So the single most important thing in those that follow the channel already know what I'm going to say. What is it? It's market structure. That's the number one thing that you really need to understand, the number one core element, the component to trading that you have to grasp, you have to master, because you just can't stare at these charts and think you know what's going on. You have to know what's going on, okay? You have to know the movement, the flow of the market at any given point. Is it going to change and start to make a reversal in the market and start to push the opposite direction? As you can see here, this is on my higher time frame, and I highly recommend that you reflect back on whatever higher time frame you want to use. If you're a time-based trader, maybe using an hour chart or 2 hour, 4 hour chart, whatever it is you're using, whatever chart styles or chart types you're using, use a higher time frame that will allow you to be able to see the bigger picture to understand what's going on in the market. Is it moving higher? Is it moving lower? Is it reversing? So that you can So that would help determine which way you need to trade. Okay, should I be taking long entries, short entries, stay out of the ranges like we had going on the 25th and 26th? And we're just going to briefly just look at the structure of the market. I'm not going to go into detail about market structure because I have videos on the channel discussing market structure, breaking it down, showing line diagrams, switching over and showing you on the candle charts as well, which you can just go to the homepage if you're interested in gather information about market structure, or at least getting a understanding of, from my perspective, how I see the structure of the market, how I restructure structure of the market. And you can not to get to learn from me, you can go and Google it and search it on YouTube or wherever, and get some other education if you choose to. But I do have a few videos on the channel here to where I go into great detail about market structure. All you have to do is go over to the homepage, Futures Trading with Mike. You'll see a little magnifying glass there on the homepage. That's the search tool. Type in market structure and a few videos should populate for you. But anyways, look at the structure of the market as we can see here. Look, I mean, it doesn't take a rocket scientist to really understand and see what's going on. I mean, from the 23rd, moving on down to the 28th, which was yesterday, okay? No, day before yesterday, I'm sorry, because today's the 1st of March. So, if you see what's going on here, you can just draw take a trend channel. Now, I don't trade trend lines and break trend lines and things of that nature. I trade supply and demand. I trade based on rejection when what happens when the market gets back to a zone. And I literally have tons of videos covering the strategy and how I trade it right here on this channel. But it doesn't take a rocket scientist to really figure out what's going on here. I mean, you can see the movement is sloping to the downside. It's like, I mean, if you were to take a sled, as a kid, what would the market be doing? I mean, your eyes would be like just going to the downside, right? So you can see what's going on right here. Lows, lower highs, lows, lower highs, and the market's breaking lower. Now, the market did range right here for about 2 days, but then it broke structure, broke below this area here at 20, made a higher low. Excuse me, a lower high, lower low. Okay, came back, pull back, pull back right here, decent, and then it broke structure again. Pull back, broke structure, and then we get a reverse on the market where we got it shifting to the upside now. So what's going on now? The market's bullish. And that's all you have to do really from a higher time frame standpoint. When you master market structure and are able to see and read the breaks of structures, that's going to help determine the flow, the direction in which you should be trading. Okay, the market was breaking structure down. All right, the close of the 28th pretty much into the opening of the 29th, which was yesterday's trading session, into the London session yesterday, early part of yesterday morning, the market started reversing to the upside. And I saw that, okay? That's why, I marked these boxes or zones here, because the market started breaking structure. You have to always be mindful and see what's going on the left-hand side of the chart. Just don't be narrow-minded to say, oh, I see the market made a high, higher low, higher high, and I'm going to start looking for opportunities to go long. No, first of all, did it break any structure going to the upside? If it did, then you can say, okay, now I'm ready to look for longs. But until the market proves its hand and shows you that it's breaking structure to the upside, you better still be looking for opportunities to go short. Again, breaking structures and the market moving in the opposite direction. When you get that, then you can start trading in the opposite direction. From where we were once taking shorts, now we're interested in taking long positions, okay? So the market pushes up. It does pull back here, as you can see here. But, and then it turns back around, starts breaking structure back to the upside. So it broke above this area here at 18,073 into the latter part or into the afternoon session, towards the afternoon session yesterday. And since then, we've been kind of moving to the upside. Decent pullback right here. It broke a bit of structure right here at, 18,035. Looks like that happened into the London session, almost 6 this morning, okay? Before breaking structure back to the upside and taking out here, looks like it right around 10 o'clock today, 18,162. So we got a breaking structure back to the upside. All right. A lot of people, and people I'm sure are asking, okay, the market broke structure back down to the downside right here. You're saying, was there opportunity to look for trade entries back at this area of supply right here? There's an area of supply, aggressive selling. That, as you can see here, the market pushed up, pulled back, broke structure. Made a high, higher low, broke structure again to the upside. Then it turned back around, broke structure below here at 18,035. Will this been an area of supply? Yes, it could have been, but you got to pay attention to what was going on here too. We got the market making these higher highs and higher lows to the upside, so it's breaking structure to the upside. If it's breaking structure to the upside, then these are areas of support you're going to have to be, very mindful of, because you can see what happened here. Even though we got the break down here, you can say, well, I should be looking for shorts, right? Yes. And you could have went short in this opportunity if you scale down to a lower time frame chart. Look for the rejection that we look for, meaning a formation of a supply zone where the market is breaking structure lower on the lower time frame. I talk about that strategy and how I trade across multiple videos here on this channel. But yes, you could look for the rejection here, but again, be mindful of support, areas of support below. So when the market taps into these areas of support, I'm just giving an analysis and rundown of what's taking place so far. It breaks back higher and breaks structure above here at 162. So now we got a break of structure, market moving to the upside. So you say, okay, well, what could take place now? Well, the market could come back down here and test this area of demand right here. So once the market starts breaking structure to the upside, then we're looking for demand. Breaking structure to the downside, then we're looking for to go short. There was opportunity probably to go short. Again, if we look for on a lower time frame, now we broke structure continuously back to the upside after we broke 162. So your mind should be looking for the sentiment of the direction of what you should be trading or trying to trade in is still to the upside until the market starts to fold back and break structure lower is what I want to say. Now, what I want to show you is, because I took 2 scalps last night, and I want to show you why. And these were into the overnight session once the market opened up into the Asian session pretty much, okay? Look, we had the market breaking structure to the upside, okay? I saw a pullback right here, as you can see right here. Let me blow this up a little bit, because this area, which I marked right here, was a demand zone. But if you see where the market had broken structure right here above 73, okay? It broke it to the upside. There's a small area of demand right here. Okay, the market came back to it. Look what happened right towards the close towards the close. It was shortly after the, right at the close at 4 o'clock. I wouldn't have traded this because 1, yeah, there was demand there. 2, we're at the close, but 3, we also have resistance right above us. And when the market broke up through this area of resistance, taking out this high right here, the swing high at 74, we're still bullish to the upside. Even though we've kind of pushed down, pulled back, broke areas, made a structural breakdown to the downside. We haven't broken any major area of structure, I should say. So when it got down to this area right here and rejected off this demand zone sitting here at 38, and then broke through the area of resistance, taking out 74, this became an area of demand right here. You can see the aggressive buying to the upside. So I waited for the opening of the session to see what was going to take place. And as the market was retracing back, as you can see right here and tap into that area of demand, you see that small little gap right there. All right. I was looking to take the market back into that area on a scalp going long off the rejection of my lower time frame. I'm going to show you that. But what I also noticed was that we have imbalances resting in this area right here, or an imbalance there in between this area right here back up to right here at 92 or 93 area. So I took a long entry off the rejection here, but when it broke above here at 82.5, I look for a pullback and a opportunity to go long again, aiming for this 92, 93 area. I'm going to show you that on the lower time frame chart now because, again, we pull back to demand right here. Then on a lower time frame, I'm going to show you the example of what takes place, and then the next part of the strategy that on a lower time frame now. I don't trade off the higher time frame. I mark a zone off the higher time frame. But when we scale or pull back and retrace back to the zone that I mark off my higher time frame, demand in this case, a demand zone, then I'm looking for rejection on my lower time frame to take a trade back up to key areas. This case here to fill in a portion of this gap right here back to the upside at 67. Once it tapped that, I was waiting to see, okay, and it filled there. What are we going to do next? When it broke above here at 82 or 83, I look for rejection again or pullback on my lower time frame, meaning back to a small area of demand on my lower time frame to take it back up to the upside and fill in 93. So let's move down to the 12 range chart, which is my entry chart. So this blue rectangle box you see here, that's the higher time frame demand zone that I said I marked. That's what I do. The market retraced back to the zone. When it retraces back to a higher time frame zone, I like to see where the market, takes out a level to the upside, meaning breaking structure above. And what it did was it pushed up, pulled back, and it broke through this area or this level right here, okay? And then I like to see a pullback to a new area of demand, or a demand area that has been created off of my lower time frame. But as you see here, it didn't give us an immediate pullback to this area or pullback to that zone. I was, waiting for after the break okay, taking out the area here, and saw that where it was creating a demand area for a pullback here, but it kept pushing to the upside. So I got in with a little bit of, with some risk, knowing that the market could pull back, but I got in and into the trade, basically aggressively without waiting for the pullback, because I knew that it was going to go up there and test, around the 67, or where did I say, 68 area. And it kept pushing in bullish momentum, with momentum to the upside. So I went ahead and got into the trade without waiting for a pullback. I don't recommend that. I recommend, like I always do in a strategy, pull back to a key area of demand. So if the market would have done this right here, let's get this line, an arrow, pull back. You see this demand area just created with all these green candles? Pull back here, basically to this area right here, and we would have got rejection and broke above, then I would have taken it on up to 68. So on the pullback, we would have got rejection where we got the break and the close, because that's the last part of the strategy. Break and a close of a candle above the last down bearish candle, meaning the last down bearish candle that pulled back to the zone, we get the rejection, and then we get the close of a green candle above the last bearish candle that I'm going long. So let's say it came back down here to 51 or 52, and then the break happened at 54 or 55, then I can ride it up to 67. 67 or 68 area. Simple as that. So that's why I took that trade. And as you see, I got out right here at 66 and a quarter, 66 and a half. Picked up 6 points overnight, pretty quick off that trade there. But I was just scalping. But again, what I noticed next was that the market did what? It broke above here at 82 or 83 area. And I saw that, all right, if it breaks above this area, which is resistance, okay, and, seeing that really nothing's really going to hold it back, because there is some areas of imbalance that it's aiming for. After it broke this area of resistance here, it made this high, pull back, okay, resistance here. When it broke above 83 right here, it's going to go up there and fill that area. It's going to test this high right here. So, and probably if we look to the left-hand side of the chart, let's see. What did it do? Give me 1 second. Okay, it kept pushing higher. But anyways, I'm focused on this area right now where there's an imbalance at. So when I saw it broke above 83, I'm back down my lower time frame. Okay? So it's breaking. All right, it breaks above that area to 83. Okay? Now it pulls back. It takes out this little small level right here, say at 75. Now the area was for demand would have been right here at 71. And it didn't quite get to that area, but I entered and took an aggressive approach in a sense, because it was showing, all this bullish momentum to the upside, pulling back, and then it started showing bullish momentum back to the upside again without forming any breaker structures to the downside. Now, it did push up, and then, I would have got in right here, say at 78, all right, which I did, okay, as you can see here. But what the market did was fold back. Now my stop would have been not right here tick to tick at 73. I would have given myself, because we're talking about the NASDAQ, and you got to give yourself just not 4 or 5 or 6 with on NASDAQ, a couple points, maybe 3 or 4 points. And you see what it did. It just wicked that area out, basically grabs, some liquidity before pushing higher. That's all they did. The new people were entering probably right here, like I did, came back, wicked that area out. So if you got in right here or put your stop, not got in, but placed your stop at 73, how far did it go? Like 2 ticks below that, 1 tick below that, and then they moved higher. And you just had to have experience in seeing this to know what they're going to do, because for one, look, we're already bullish, okay? They just broke through this area of resistance. There's an imbalance resting right here. So the area that they're going to try to test, especially on this pullback right here, after they break this area here at 83 and break resistance right here like they did, then look for a pullback on your lower time frame to specifically a key area of demand. Wait for the rejection, the break of the close of the candle, or some means of momentum to the upside and get into a trade. But just be mindful and place, have a stop where, you possibly want to get out the trade if the market comes back. But if you put your stop right here at 73 and you got stopped there by 1 tick before it actually went up in that direction of going to the upside and filling in all the way back up there to 93, 92 and a half, 93. And that's why I entered that trade. So I got in here at 78 and a quarter. It pushed up. It came back some. So, and then it went on up there to 92. So that was a decent trade. And that was 2 trades back to back. Shortly, we're talking what, 650 there, and here was, I don't know, 830, 840, whatever the case is, but it was kind of back to back over, less than a 2-hour time span. I just kind of saw it, and I don't sit here right in front of the charts, in the evening session because it moves so slow. but I just saw what was taking place on my higher time frame. You know, when they pull back here and hit this area of demand off of right here from the yesterday's or from the prior session, when the market opened back up, I'm sorry, let me take that back. When the market pulled back towards the close of yesterday's session, hit this area of demand, I saw that there was an area of imbalance resting right here. And I told myself, are they going to break this area of resistance and test that area of imbalance there? If they do, then I'm going to be interested into the session, you know, meaning the new session that opened up yesterday evening to possibly look for an opportunity to go long. And that's exactly what I did. So again, on those two trades there, you know, once I marked my zone off of the higher base chart or higher time frame chart, which I do my 60 range chart, you know, if you trade time based, whatever that may be for you, I don't know, because I don't trade time based charts. So I don't even know what the equivalence is. But anyways, what I'm trying to say is that once you mark off a higher time frame zone, like right here, like I did, then you just looking for a demand zone to be created with the breaker structure to the upside. Like right here, we got this, but the market never pulled back. But this would have been, had it pulled back, and not every time will it do exactly what we want it to do, but this would have been the zone on the 12 range lower time frame chart to look for a pullback, look for the rejection, and get in. Now, I got in aggressive because I saw the bullish momentum push to the upside, which is breaking candles one after another, and I knew that, and looking at it, I took the risk of taking it back up to 68 because of that area imbalance. What was that? Right here was the rejection, back up to this area right here where I had this little arrow at, where they're going to test that. So I took my shot there. And then the same thing here, where it broke up and they were aiming for, you know, I saw they were aiming for this area of imbalance resting right here after they broke to the upside and broke above here at 83. Again, you know, we pushed up, broke above 83, pulled back. This would have been the demand zone, you know, how we want to see it unfold, that we want them to come back to, which we were only like, what, I think about 5 or 6 ticks there, maybe 4 or 5, whatever it was. They didn't test it 100%, but we got rejection. And I got in aggressive again because I was, you know, I saw that they broke above this area here when they pushed up right here, and there was an imbalance resting right here. So that's why I took the trade, okay? But I recommend really just kind of, you know, waiting for it to hit the zone. If you are a new trader, someone beginner, and you really don't have much experience, and you want to follow the steps to the 100% to the T, then just be very, very, very conservative with what I'm trying to say about entering until you gather, you know, until you possibly gain some more experience, whatever the case is. But this is what has helped me in time by having a strategy that walks, you know, step by step through a process of a series of things unfolding before just jumping into a trade. So many people are just chasing the market, you know, and they have no idea. I see people and hear them all the time. Well, what's going on in today's market? You know, it seems to be pushing higher. They're questioning because they don't know how to read the market. If you know how to read the market, you're not going to question the direction of the market, because you're going to be able to read market structure and know what the market is doing and know how to trade according to. So if you're questioning yourself, then that means that you don't know how to do something correctly. Okay? And I highly recommend you stopping while you're ahead before you start, you know, put yourself in a position to where you're being wasteful with money, you know, and blowing accounts, and all you're going to do is cause frustration for yourself to where you're going to want to stop doing this because it's going to leave a bad taste. So stop while you're ahead. I stress all the time, market structure, market structure, market structure. It is king. You have to understand what's going on within the market to be able to trade accordingly. I'm going to leave it there today, guys. I appreciate everyone who's tuning in and watching today's videos and all the videos, okay, because I recommend you watching the videos because I'm putting this content out here for free, in a sense of just because I want to see people succeed, and I've been doing this for months. That's why there's so many videos, because I'll drop a video like every single day, because I want to see people really, truly succeed. I don't have to do this, but I choose to do this because I'm seeing there are people who becoming successful watching the videos. And how do I know? Because they're coming over to our community, our Discord community, and posting information saying, Mike, thanks. What you've shared has been life-changing for me. It has helped me out. I really, truly appreciate, you know, you making this video content, and I'll continue doing so, you know, because I see people who are becoming consistently profitable and successful through the means of educating themselves, watching the videos, and that's why I tell people watch the videos, okay? Outside of that, that's all I have for you today. If you're interested in joining the Discord, just find that link down in the description portion of the video. It's free of charge to join. Come over and join us. If you have general questions about trading futures, you can also ask. There's 2 channels there. We have the general chat for asking questions, and then the trading floor where we as traders post, you know, screenshots or entries of our trades that we take. And you have the chance, people who are newcomers or beginner traders are understanding futures or supply and demand, and not everybody trades supply and demand. So, people do post their trades of how they trade, and may trade differently. And it gives you opportunity to ask about, certain individuals or community members' trades if you choose to. But, I don't do any trade alerts or giving out, free alerts prior to, a trade being taken, but discussion of zones and why trades were taken, things of that nature. Yes, that's what goes on the trading floor. But there's no trade alert, signal alert type activity on the Discord. Because I believe that each trader should be able to learn and educate themselves. There's plenty of content here. But that's if you choose to kind of educate yourself surrounding the way that I personally trade. Again, I'm not pushing anyone to trade the way I do. I'm just here to share my experience and how I trade on a daily. But outside of that, I appreciate everyone tuning in daily. If you're not a current subscriber, please take the time to click on the sub button. All right, make sure to turn on all your post notifications. And last but not least, if you found value in today's content, which I hope you do or did, please drop a like on the video. I'll see everyone in the next video, and please have a safe weekend.